Well, hello and welcome, all my loyal YouTube subscribers. Appreciate you being here. So, if we look here at the futures market here on FinViz, which shows us where the cash market will open, we can see that the four major indexes, the Russell 2000, the Nasdaq, the S&P 500, and the Dow Jones Industrial Average, are all down. They were down a lot more not that long ago, so this may change prior to the market opening, which is quite some hours away yet, but keep an eye on that. If they're all down by more than 1%, that's significant. It shows you where the cash market will open. Obviously, the UK, the Russia-Ukraine conflict is causing a lot of issues. Even with some positive job numbers coming out recently, markets still being weighed down. We need to know what's the line in the sand, right? We need to know the numbers to look for in the market. And right now we can see we are sitting on a significant support level, right? We bounced here. We got below it temporarily, and now we've moved back up above it, and we're sitting on it again. It's around 4,300. Remember, support is a zone, not a specific price. So 4,300 is that line in the sand. But to be even more specific, let's go and have a look at our opening range, which is 92% accurate. What we do is we put the high and the low of the first trading day of the month, which was the 1st of March, obviously, and also we reset the opening range again on the 3rd Friday of the month. Okay, so if we look at that right now, anything below 4279, close below 4279 on the SPX, we are in bearish opening range mode. So right now we're neutral. Okay, we're in neutral opening range mode as we speak. So we'll keep a close eye on that. And obviously anything above 4378, and we're in bullish opening range mode. So we'll keep an eye on that. We're still below the 200-day moving average on the SPX, but that opening range there, they're the two numbers, 4279. Anything below that, a close below that, daily close below that, on the SPX, you're in bearish mode. Anything above 4378, a close above that, and you're in bullish opening range mode, right? So keep an eye on that. We look at the total put-call ratio, the 10-day moving average of the total put-call ratio. Right now it's at 0.98. Anything that's around 1 shows that everyone who wanted to sell has now sold, right? Everyone's short, everyone's hedged. It's an insanity point. So this is actually a bullish reading. Now, you can't just take one central data point by itself to work out where the market's going to go. We need to know what the ranges are between bullish and bearish, which I've just told you, but we need to look at some of the market internals as well. And this particular market internal is telling us that the market is likely to move higher. But when we look here at the skew, right there, the skew, which is the perceived risk of a 2 standard deviation move or more to the downside, anything above 135 is bearish. The smart money is concerned about a market crash. So that is bearish right now. We look at the trend, the most accurate overbought, oversold reading on the stock market. We can see right now that's trading at 0.87. So that's neutral, not really telling us anything. And the SPX put-call ratio is neutral as well at 2.0. So we've got some neutral readings here. But, you know, if we have a look here at the risk appetite of the market, we can certainly see that we are in risk off mode, right? No doubt about that. High yield bonds. I use these 5 key exponential moving averages to tell me whether a market or a particular area is in a uptrend or a downtrend, money flowing into it, money flowing out of it. And when we got the 89, 55, 34, 21, 8, all those exponential moving averages stacked in that sequence with the 89 on top, 8 on the bottom, that's obviously bearish in a downtrend. So high yield bonds is in a downtrend, and junk bonds, they're certainly in a downtrend as well. And then the most volatile stock, which is the most risky, is biotech. That's in a downward trend as well. So we've got this rotation out of growth stocks into value stocks. We've also got the fact that the market is in risk off mode right now with what's going on around the world with the Ukraine-Russia conflict right now, which hasn't been around for that long, maybe 10 days, something like that. So definitely there is some concerns there, but right now we're still neutral. Okay, we are still neutral. There's nothing that's telling me that we're about to fall dramatically, but again, that could change. We know the numbers to look at. Our job as traders is not to try and predict what's going to happen. No one can do that. There's a lot of so-called experts out there that will tell you they know what's going to happen next. No one knows. That's the simple truth. So what we need to do is look at what the market is telling us, trade what we see, not what we think. And right now we're in neutral mode, but we know specifically when we will get bearish or specifically when we will get bullish. That's the key here. So neutral right now, but could very easily tip to bearish very quickly, and we'll be keeping a close eye on that. And we know specifically what to look for this week, and we've run through that now. So this week we have got a mixture of bullish and bearish positions. So if you have a look, obviously, biotech and junk bonds and high yield bonds are all moving down, risk off. So where is the money going then? Well, if we look at energy, we can see that that is clearly in an uptrend. 89 on the bottom, 8 on the top this time, right? So now we're in an uptrend here, mainly due to oil. Oil's been moving up very strongly, will probably continue to do so. So what we want to be able to do here is look at some good oil companies that are paying good dividends that are likely to continue to move up with what is going on. Now, one of those is Marathon Petroleum. So we can see that's stacked in an uptrend. And if we have a look here at Marathon Petroleum, it has pulled back to the 21. Okay, and I believe it's likely to bounce off here and start to make new highs, get above that $80 price point. So right now, this particular company projects that it will generate $2.2 billion in cash flows this year, which is beyond the $1.7 billion committed to its capital program and beyond the $1.3 billion devoted to its 3% dividend. It's a pretty healthy dividend there. Also, Marathon recently announced that it would buy back $5 billion worth of its stock. Okay, a $5 billion buyback program was recently announced. So, typically that will drive the stock higher as well. My target on this stock, trading at $77.73, is $93. So, how would you monetize that with everything you just told us, Sean? Well, because the market is so volatile and could switch very easily, don't want to take a lot of risk. So what I would do is I would set up a call debit spread on this, looking for it to get above $80, right? About, not too far above where it is now. Looking to do that in the next 5 weeks. So if I could get Marathon Petroleum above $80 in the next 5 weeks, I could make a very nice return. So $268 is the cost for one contract. Obviously, you could have 1, 2, 5, 10, 20, up to you. Depends on what your risk levels are and how much money you have in your account. But $268 per contract. The potential profit is $232 a contract, or an 87% return on risk. How could we up that return on risk? Well, we could set a stop on this spread. If we set a stop at $1.68, our risk would only be $100 a contract for a potential reward of $232. So that's more than a 2.3% asymmetrical risk trade that's skewed in your favor. 2.3 times higher potential reward than the risk that you're taking. So that's a way that you could do that. Now, another position that I'm looking on here is ExxonMobil. Now, if you can have a look at what the trade we just spoke about, Marathon, you have a look at that. It's come down and bounced off the 21, or sitting on the 21 right now. If we look at the other one that we're looking to get into with oil, it's actually already done that. Come down and bounced and then started to move higher. I believe that's what Marathon is about to do. So this one is looking pretty good as well. I like the look of this one. And again, I'd be very conservative here. It is the largest US oil company in the world. They say that they can cover its apex and dividend at a crude oil price of $41 a barrel. And believes that the break-even oil price will be $10 below that by 2028. So $31 a barrel by 2028. So that's pretty incredible, particularly because this company, ExxonMobil, is positioned to potentially buy back 30% of its stock by 2028. So my price target here is $110 on ExxonMobil. So I do like the look of this one as well. However, I am being very conservative here. I will be doing some different types of positions with this, with my money wheel program, but with this here, I'm being very conservative and setting up another call debit spread, trading at $84.09. I'm looking for it to get above 90 in the next 5 weeks. Okay, so that's what I'm looking at there. Now, this stock does also have a 4-hour squeeze that is just broken out with the Bollinger Bands inside the Keltner channels and now breaking out. So that's a bullish development as well. So this one, I'm setting up both the bought call and the sold call out of the money. So this is a little bit more aggressive. So costing me $183 for one contract. Potential upside though is $317. So I would set the stop at $93, buying for $183, setting the stop at $93, risk $90 for a potential return of $3.17 or $317 for one contract. So our potential profit is more than 3.5 times the risk that we're taking. Great asymmetrical trade. So that's another one that I'm looking at. And then the last one here is Rblx. Now, this is a gaming company. If we have a look here at the last lot of earnings that they actually produce, let's have a look. Rblx. This is a bearish trade. Okay, so if we have a look what they produced a couple of months ago here, loss of 25 cents earnings per share. They're expecting 11, so loss was more significant. Revenue, they only produced 568 compared to what the analysts expected, 777 million. So they were down on revenue, down on earnings per share, and not typically profitable, right? Not great results. In fact, they weren't profitable. They had a loss. So if we have a look at this stock, Rblx, you can see just down, down, and more down. Once it broke that 21 EMA, has used it as a resistance level a few times and just continues to move down. So we had some igniting volume here as it gapped down, some igniting volume there, and just continuing to move down. Now, right now, trading at 42.29, I think it could get below 40. Okay, so again, setting up a very conservative position here on Rblx, bearish this time, looking for it to move down. I'm looking for it to get below $40 in the next 5 weeks. Okay, it's at 42.29 right now. So I'm going to sell the 40, buy the 45. Okay, so that's how I would do that. Sean, how would that look? Like if I was going to do that in my brokerage account, how would that look? So type in the stock symbol, obviously, 14th of April. Okay, strategy builder on. Click the plus sign so you can see these option chains much more quickly. We're on the put side now, so I need to be looking on the right-hand side. We're going to buy the 45, so click on the ask. Sell the 40, click on the bid. Now, if it doesn't say bear put, you've done it incorrectly. So the sold strike price of the put option is below the bought strike of the put option. When it's a call debit, obviously it's the other way around, with the sold strike above the bought strike. But when you're doing the put debit spread, okay, you are buying the 45, in this case, selling the 40. We need it to go below $40 come the 14th of the 4th, about 5 weeks from now. So the in between those two prices, the bid and the ask, is around $2.73. So costing $273 a contract. Okay, you would then set up a stop on this at right here at $1.53, so risking only $120 a contract. Okay, almost a 2-to-1. So that's how you could do that, right? So a couple of bullish positions, not taking a lot of risk, setting them up with spreads, and one bearish position there on Rblx. You know the numbers to look at. That's the market analysis for this week. I hope you enjoyed that. I'll talk to you again next week. Let's keep an eye on what happens with the Russia-Ukraine situation and conflict there, and then also those key numbers that I just mentioned to you all just now. All right, my friends, I'll talk to you again next week. All the best, and bye for now.